This is Mixlot Production.
Nigeria's gross domestic product has grown for the fourth quarter in the year 2018, and that is to the tune of 0.27% when compared to the same period in 2017. The stock exchange is experiencing a downward trend due to unpredictable nature of the Nigeria general election coming up on Saturday this week. All of these and several other reports is what we'll be looking at on the program Money Talk. The program once again is Money Talk, and I am a regular host on the program, Gabriel Kuma. I'll be giving you all of this. Let's take a quick break, and when we return, we'll be giving you what is happening in the world of business. Stay with us. It's an election year for Nigeria, and everything is tilting towards election. But before we get to how the election has affected the stock market, let's tell you what is happening concerning the gross domestic product of Nigeria. It says that it grew by 2.38% in real terms. That is year on year. That is based on the statistics coming from the National Bureau of Statistics. This represents an increase of 0.27 percentage point when compared to the fourth quarter of 2017, which recorded a growth rate of 2.1%. It also indicates a rise of 0.55 percentage point when compared to the growth rate recorded in the third quarter of 2018. You would recall that the Economic Recovery and Growth Plan of Nigeria, developed by the Ministry of Budget and National Planning to drive growth in Nigeria's economy, had predicted that Nigeria's economy was going to grow by 3% in the year 2018, and the World Bank and the IMF said no, the economy based from where they see it can grow only to the tune of about 2.2%. But we saw a growth of about 1.8% in the third quarter, and that 1.8% trended downward again in the second quarter. It trended downward again in the third quarter, where we saw 1.5%, a slide of 0.03%, and that was exactly what we saw. But in the fourth quarter, which is a period between October and December last year, we saw that Nigeria's gross domestic product has grown to 2.38%. If you look at this figure compared to what the Economic Recovery and Growth Plan of Nigeria predicted, we still have not gotten to the 3.00% we're expecting. At best, we are around what the International Monetary Fund and the World Bank had predicted, that we will grow at a rate of 2.5%. We are doing 2.3% now, and we still have not gotten to that point. But that's not too far from what the IMF prediction and the World Bank prediction is. So if we look at it critically, it means we are close to what the IMF and the World Bank had said, and the Economic Recovery and Growth Plan, as predicted by the federal government, has not gotten to that point. We are waiting to see the strategies and how Nigeria's economy will grow in the first quarter of 2019, judging from the fact that the elections are here and everything is affecting the election. We are talking about people who are withdrawing their money from the economy, and some some people are investing despite the fact that the unpredictable nature of the outcome of the elections is still what we are awaiting. Some investors, are throwing in their money in the tower and saying, let's invest and see what happens. After all, investment is a risk, and you must take that risk if you must make profit. We have that during the fourth quarter, aggregate nominal GDP stood at 35.23 trillion, which is higher than 31.28 billion naira recorded in quarter 4 2017, a nominal growth of 12.65%. For 2018, nominal GDP was therefore recorded at 127.76 trillion naira, representing a nominal growth rate of 12.36% when compared to 113.71 trillion naira recorded in 2017. Now let's take a look at the stock market. The news coming from the stock market, it's not favorable at all, as we have just barely 4 days to the general election. The news coming from there is saying investors in the nation's stock market have lost a total of 4.30 trillion naira in just over 1 year, as it took a beating from uncertainty around the forthcoming general election and interest rate hike in the United States. So many of the investors who have base in the United States are withdrawing some of their investment from Nigeria due to the fact that the U.S. has hiked its interest rate. And that means that if you invest in the U.S., you are likely to get more than you should have gotten if you have invested in Nigeria, because their interest rates have been hiked slightly to attract more investors into their own economy. And once that is done, it affects every other economy, because whether we like it or not, every other economy depends on the dollar. Even the Chinese economy that is talking about the yen. If the U.S. is to withdraw their investments from China, it will be very difficult for China to stand on its own. So every other economy in the world depends on the economy, on what happens in the U.S. Once there is a hike in interest rates in the U.S., you see people withdrawing their funds and sending it back to the U.S. because they are likely to get more. And U.S. does that to attract more investment into their economy. We saw a drastic reduction of, the Nigerian reserve last year, especially between August and December last year, because U.S. increased their interest rate and people were withdrawing their dollars, which is their entitlement to take it to the U.S. government. And that made us lose about $5 billion from our national reserve, which the nation is trying to build up again prior to the election. The market plunged to its lowest level in more than 1.5 years on January 9, as the market capitalization of equities listed on the Nigerian Stock Exchange fell below the 11 trillion naira marker of 10.940 trillion naira. The market capitalization had risen from 10.854 trillion naira in June 2017 to 11.262 trillion naira on June 5, 2017, and hit a record high of 16.154 trillion naira on January 19, 2018. It stood at 11.851 trillion naira on Monday. As at Monday, yesterday, it stood at 11.851 trillion naira, which is about 4.9 trillion naira less than its highest record of 16.15 trillion naira in January 19, 2018. The report here says that the Nigerian stock market had fallen more than any other in the world in dollar terms since President Muhammadu Buhari came to office in 2015. Analysts say Nigeria's stock could see a relief rally once Saturday's presidential election was out of the way, and rise as much as 10% this year as investors pile back into riskier assets. The report quoted analysts as saying that investors had tentatively started to pick up shares to position for a post-election rally, which could help lift the all-share index to 35,000 basis points this year, from around 31,000 basis points now. Now, what this is saying is there are skepticism of what the outcome of the election is, and that does not just happen in Nigeria. It happens to every nation that goes through the period of election, because investors, are uncertain who will come to power. They're uncertain if an incumbent is going to stay in power, or if an incumbent is going to leave power. Whatsoever happens, it tells on the Nigerian Stock Exchange. That's why even political statements should be weighed carefully if the love of the economy, the growth of Nigeria's economy is what our politicians are seeking. There are statements made by politicians that have a toll on the Nigerian Stock Exchange, and you see the shares, plunging, because some people are holding back and saying, look, because of what is going on, I'm not sure I will invest my money and make some profit. Whereas the aim of every business is to make profit. So they hold back to their resources and wait to see what the outcome of some statement made by some people will bring out. If we recall, the day the CJN was asked to step aside, the Nigerian Stock Exchange reacted. That is not just common. It's just common everywhere in every nation. Whenever there is a critical policy statement made by the government, the stock market either reacts by increasing the number of investments, or by reducing, from people holding back and saying, look, I'm not sure, let me wait until the coast is clear before I invest. So many people are holding back now to see what the outcome of Saturday's election will be, and this will continue until Monday before the announcement of the result. But there will be a surge certainly on Tuesday, and that depends on the outcome of the election. The Nigerian Stock Exchange, after the announcement of result, is going to see a plunge, whether going higher or going lower as a result of the outcome of the election. Let's now look at other reports. Say the NSE All Share Index fell to 29,336 points last month, its lowest since May 2017, and lost 17.8% last year as uncertainty around the forthcoming election and interest rate hike on the U.S. found outlaws. We now have Saturday's presidential election is expected to be a tight contest between the incumbent and the main opposition, the People's Democratic Party, as chances of more than 60 other candidates are seen to be slim. The Nigerian stock rose by 0.8% on Monday to 31,782 basis points, extending gains for the 7th day and trading at a near 2-month high. That's on the stock market. Let's now go to the behavior of the Naira, the Nigerian official currency. Meant for transaction, and report is telling us that the Naira was stable yesterday at the interbank market at 358 Naira per dollar in the parallel market. 358. We could recall that the Naira appreciated against the dollar last week, when we saw the Naira appreciate to about 351 Naira per dollar, but that has risen again to about 358 Naira per dollar, which means we're having more of the dollars now in the economy. Although so many people have withdrawn, but those monies have not left the economy. And the spending behavior of politicians goes to show that not so much of the dollars are being spent when you compare it to other previous elections in 2011 and in 2015, where dollar was almost becoming the currency Nigeria was using for campaign purposes. We've seen a reduction of that, which is not far from the fact that less dollars are being spent as campaigns are going on. However, the Naira depreciated by 41 kobo in the investors and exporters, popularly known as I&E window. Data from FMDQ show that the indicative exchange rate for the window rose to 361.95 Naira per dollar from 361.54 Naira per dollar last week, Friday, translating to 41 kobo depreciation of the Naira. The depreciation was due to a 65% decline in volume of dollars traded, which fell to $113.86 million from $300 $28.4 million last week. That's a great fall from $328.4 million to $113.86 million. Let's see how far this will go, but we do sincerely hope that the Nigeria's economy will grow to a point where the naira will drop drastically. As at now, the official exchange rate set by the Central Bank of Nigeria is 305 naira to a dollar, but at the interbank market it is hovering between 360 and 362 naira per dollar. Now, the Economic and Financial Crimes Commission and the Association of Bureau de Change Operators in Nigeria have taken the campaign against money laundering and terrorism financing to Bureau de Change Operators at the Murtala Mohammed Airport in Lagos. Speaking during the sensitization program against money laundering and terrorism financing campaign at MM2, which was attended by many BDC operators, the acting chairman, EFCC, Ibrahim Magu, called for continuous sensitization on issues around anti-money laundering and counterfeiting, the financing of terrorism reporting to improve transparency in BDC's operators. We had reports on good grounds that much of the money, laundered from Nigeria to other parts of the country is passed through the Bureau de Change operators. The more reason why the Central Bank of Nigeria, placed restrictions on the Bureau de Change operation, where nobody exchanges money at the Bureau de Change until there is a BVN and several other documents, obtained by the Bureau de Change before allowing anybody exchange such money. And the anti-money laundering policy says no single individual is allowed to travel in or out of Nigeria without with about $10,000 without declaring that money. It's either you declare the money at customs and immigration, and it is taken record of that you are traveling with such money, or you are coming in with such money, or you will be arrested when you fought this policy. This is to enable the nation track, monies moving out of the country and in the country through the airports, and you must abide by this stipulation. We've had instances where so many investors who claim to be traveling with money to import some goods and services, have more than $10,000, and they did not declare it at the entry point or at the exit point of the airport, coming in or going out of the country. It's a law and it must be adhered to. This is to check anti-money laundering and financing of terrorism activities in the country or even outside the country. Ibrahim Magu said the EFCC would continue to campaign for financial integrity and transparency in Bureau de Change operations. That's a report we have from the EFCC there. Now, let's take a look at, boosting the SMEs in the country. Now, what policy is on ground to ensure that we boost the nation's small and medium-scale enterprises? The Central Bank of Nigeria is saying that the National Collateral Registry would boost lending by financial institutions to the micro, small, and medium enterprises by over 1.2 trillion naira. The CBN Governor Godwin Emefiele said this Monday in Abuja at the opening session of the first national workshop for justices and judges on secure transaction in immovable assets Act 2017. The workshop has at its theme leveraging movable assets for credit delivery in Nigeria, legal and regulatory framework. Emefiele explained that Nigeria's quest for inconclusive economic growth and development would be futile if the country failed to adequately ease access to finance to SMEs. He said despite the fact that the SME sector was vulnerable owing to various challenges, it remains a catalyst of economic growth. Now, for countries who have harnessed the potentials in medium and small micro and small and medium enterprises. They've taken it as a responsibility to ensure that there is policy on ground, and the MSMEs are supported to ensure that the economy grows. Most of the contributions to the growth of the economy comes from small businesses, and that is where you see the accumulation to what we say is the GDP growth. Time will not permit us to dwell so much on these, but we will be taking a critical topic at the end of election next week. That is next week Tuesday, where we'll have a professor of the stock market, the first we've ever had in the nation, coming here to tell us the behavior and what we are likely to expect post a presidential election in the nation. He'll be coming in the studio on Tuesday. He could not make it today, but he'll be coming here on Tuesday to tell us what is happening. Now, you can be part of this program by interacting with us on our social media platform displayed on your screen, and you can do well by sending us messages on our Twitter handle, through our Gmail and through our Facebook to interact with us. You can also be part of this program by advertising your goods and services on this program. You can sponsor part of this program for a quarter or for more than one quarter, and we'll be glad to have you on the program. You contact us through the number displayed on your screen. Until we come your way next week Tuesday, same time, same station, I am Gabriel Kuma, your regular host, saying enjoy the rest of your day.